And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ right here in Lagos. I'm Ladi Williams. It's great to have you share your morning with us now. But first off, let's kick off with the markets now. Let's see what's happening right there. We see big news. Yesterday, domestic equities market surged to its highest level since July 2008. The first trading day yesterday after the holidays hit about 58,163 points, up about 4%. We'll drill down on what drove the market and what to expect today. Will the rally continue? Find out later on the show. Let's head on to other markets now. We see U.S. soybean futures edged lower today as traders locked in profits after a rally in the previous session following concerns over crop conditions amid dry weather conditions in the U.S. Midwest. Wheat snapped a four-session rally, and corn futures also fell, extending losses to a second consecutive session. The most active soybean contract on the Chicago Board of Trade, SV1, was down 0.2%, $13.96 for a three-quarter of a bushel, after reaching a month high in the previous session. Wheat WV1 lost 0.2% to $6.35 a bushel, while corn CV1 gave up 0.8% at $6.07 for the quarter of a bushel. President Vladimir Putin said on Tuesday that Russia was considering withdrawing from the Black Sea grain deal because the West had cheated Moscow by implementing none of the promises to get Russian agricultural goods to the world market. So much to watch out for in the grains market. We'll keep tracking that development story there. To the oil markets now, we see oil prices inched up today as investors waited the outcome of the U.S. Federal Reserve's June meeting. Key economic data from China and government data on U.S. crude stockpiles also waiting that. Brent crude futures, that was up 32 cents, about 0.4% at $74.61 a barrel, while U.S. WTI crude is at $69.64 a barrel, up 22 cents. Both benchmarks climbed more than 3% on Tuesday on hopes of rising fuel demand after China's central bank lowered a short-term lending rate. Rate hikes strengthened the dollar, making commodities denominated in the U.S. currency more expensive for holders of other currencies. And weigh on oil prices, opposing hikes would spur economic growth and oil demand, supporting prices. And $11 billion is expected to be added to Nigeria's revenue earnings with the establishment of the Belema Suite port terminal in River State. This is according to the founder and president of Belema Oil Producing Limited, Mr. Jack Rich. He stated this yesterday as he received his license from the Nigerian Midstream and Downstream Petroleum Regulatory Authority to establish the Belema Suite export terminal, Africa's first hybrid crude oil export terminal located in Kula Kukutoru local government area of River State, Nigeria. Take a listen.
Years of negotiations have culminated in this meeting in Abuja, where finally the Nigerian Midstream and Downstream Petroleum Regulatory Authority is given the license for the establishment of the Belema Suite export terminal to the company's president, Mr. Jack Rich. Seated here are stakeholders involved in these negotiations, and as stated by the chief executive of the authority, celebrations are in order as this license is among the first set of licenses to establish such terminals authorized by the authority.
Subsequent to these licenses, terminal establishment notice are to be published in the Federal Government Gazette, which will make it a legal process.
As the authority chief executive signs the license, making it a legal tender, he hands it over to the president of Belema Oil Producing Limited, Mr. Jack Rich, who breaks down the impact this export terminal will have on Nigeria's economy.
This license awarded to Belema Suite Export Terminal that is sited in Kula goes a long way to show that Nigerians are investing in Nigeria. And this also goes to show that you, the foreign investor, that is still seated on the fence, you got to come on board.
Activists from the Kula community are keen on the impact this terminal will have on the community, especially when it comes to job creation.
This terminal, the joy of it is that it's one of us that is putting this terminal in place, and that the president in just 2 weeks, after many years of presentation, many years of trying to make this come to a reality. In just 2 weeks, the president has given approval.
Mr. Jack Rich is aware of the responsibility ahead of him and speaks about plans to ensure the terminal meets international standards.
We've been going through a lot in producing crude and getting our crude, reportedly stolen. We don't even know who stole our crude. We lost about 6 million barrels of crude that is worth over nearly $700 million in a couple of years. And since August, we had none other option than to look for alternatives. So this is a radical move to ensure alternative export medium to enable not just our field, but other operators within the corridor to have a way to store their crude and export their crude so they can earn a lot more.
Belema Suite export terminal located in Kula, which has 6 oil mining leases, will provide an alternative route for crude oil exports after a full-year shutdown of the transnational pipeline, which delivers crude oil for export to the Bonny terminal, thanks to the activities of criminals.
Now to our first conversation. Nigeria's agricultural industry has been experiencing several shocks since the pandemic disrupted the food system and hampered productivity. High insecurity has impacted farming activities also in the country, and the situation got more intense in 2022, forcing many farmers to abandon their farmland. Meanwhile, Central Bank of Nigeria said its various development finance interventions have boosted food security in Nigeria. And we'll also see the former president, Muhammadu Buhari. He signed the National Development Fund Bill, which is now an act. So much to unpack in that sector today. Joining me now is Rotimi Williams, founder of Kereksuk Rice Farms. Great to have you on the great to have you right here on Business Morning in our Abuja studio.
Good morning, Ladi. Thank you very much. Good morning.
So let's start off with the National Agricultural Development Fund Act. Former President Muhammadu Buhari did sign this into law late 2022, but it seems nobody's talking about this fund. Tell us about this fund and what to expect, going forward.
I'd like to start by just saying that I think the fund, in every sense, is the right direction. I've always advocated for agricultural funds to be created off the back of the levy when you're importing this crop. So basically, the levy you pay on rice, on importing rice, is the same levy that goes to fund your local production, and be it in wheat, maize, and other products. But in the creation of the Nigerian Agricultural Development Fund, I think there's just a bit more light needs to be shed as to what exactly the mandate is. I think it's a great fund initiative, but we need to know more about it. We haven't heard a lot. I think it was inaugurated last year, but the MD was only picked about a few days to inauguration. So we don't know too much about it. And just like you, I'm also waiting to learn. But I think it's a fantastic initiative, and if handled properly, the impact could be, probably way better than the anchor borrower.
So gauging how it would work, going forward, they're taxing imports right now of most of these grain products. And what is that tax? What's that money supposed to go into? I hear it's to develop local production. How exactly is it supposed to work?
Okay, so if I just track back a bit, so if you look at rice, for example, they closed the borders and they stopped the importation, banned the importation of rice. And I've always advocated for that ban to be lifted, because I believe that if you allow rice to be imported and the importers pay their levy and their duty on that rice, on that shipment, and then the levy, a portion of that levy can be used to create a fund which will then invest in the production of that same product. So basically, your importation is funding your local production. That's what makes sense. Now, in terms of disbursement, I generally feel like that fund should come in and address the issues of land clearing. Land clearing cost is a huge aspect of agriculture that a lot of small-time farmers cannot afford. Last time I checked, it was about 150,000 to 200,000 naira to clear a hectare of land. You see, so how do you expect someone at the subsistence level to afford that? So I think if the fund can address that, if the fund can also address security issues, right, within the rural area, rural farming communities, that would be amazing. I also think that in terms of tractor hiring, if the fund can come and bridge the point at which you pay for tractors and inputs. So for example, a farmer paying for a tractor to plow his land and paying for the inputs at the beginning of the season is a lot of pressure on the farmer. If you defer that payment to the end of the season and use that fund as a bridge to the provider, that will allow the farmer to expand on the land he's producing on, and you'll be able to double production. So I think if it's applied in that manner, then we have something good going.
Yeah, we definitely hope it's applied, in that manner. But let's look at the CBN's agriculture flagship program. That's the Anchor Borrowers program. I saw that screaming headline yesterday that about 500 billion naira lost to Anchor Borrowers program. Yeah, that sounds quite bad. Is it that the farmers, or most of the farmers, aren't paying back, those loans? Is that the issue here?
I think so. I think the Anchor Borrower itself, it wasn't the worst initiative in the world. I think it came to bridge a gap, but in the implementation and the merit of the people giving these monies, I think, is where the flaws are. So a lot of, I attempted to get this fund, but it was always one story after the other, and the Bank of Agric wasn't funded, and going through a commercial bank just didn't make sense because they don't understand, they don't have appetite for that risk for agriculture, so it didn't make any sense. But however, when it comes to came to the deployment of or disbursing of the funds, there are too many shambolic things going on in the background. There was monies being paid up front to be able to access this fund. You're going to have to ask the people approving the monies as to what exactly went on there. And, once you pay a huge kickback of 15-20%, why would you return the money? So if I ask for 2 billion and I'm paying you 400 million naira in advance as a bribe to get access to the 2 billion, why should I give you back that 2 billion? Because it's going to take me 1 or 2 years to, first of all, recover the kickback I've given you. And this was the norm. They normalized this for this Anchor Borrower. It didn't make any sense. So the impairment you see now, that is a huge factor. So if you disburse the 1.4 trillion, about 280 billion has already gone in kickbacks. That's money is sunk, is gone. So how then do you expect the other people? If you now look at the issues in the agricultural sector, you look at flood, you look at insecurity, you look at the market structure, the general know-how and the challenges in the agri sector, coupled with the kickbacks given, it's already hard to even give back the entire 2 billion within the time frame. Now add that issue of paying the kickback and expecting the money back, it's not going to happen.
But we definitely still need to...
It's an initiative with good intentions, but executed poorly.
We still need to confirm if kickbacks were actually paid. We can't really confirm that, for sure. It's still, word of mouth, at this time. But, were there any positives? Were there any positives at all to this Anchor Borrowers program?
Like I said, the intentions were good. I'm not saying that everyone who took the money, whether kickback was paid or not, did not do what they were supposed to do. But I'm saying that in terms of how the monies were given out and purely the merits. There are people I know that are proper farmers who couldn't access this funding. And then you tell me that some politician got the fund and yet is sitting down in the house. Do you understand? Who exactly is on the farm? And if you consider me to be one of the biggest rice farmers in the country with a huge amount of land, not accessing that fund, it'll be interesting to know who exactly the money was given to. So I'm not saying that the Anchor Borrower scheme did not make sense or there were no positives, but I'm just saying that the negative far outweighs the positive at this point.
And definitely, looking at the program, do you think it should be continued, or what can be done different to actually make it work, for the agricultural sector?
I think, first of all, it needs to be moved off the balance sheet of the central bank. I think the appropriate ministries should begin to handle this sort of intervention. So if you look at the Anchor Borrower, for example, should have been a deal between the Ministry of Finance and the Ministry of Agric with the Bank of Agric disbursing the funds. Do you understand? That's how it should have been. So I think that for continuation, move the fund to the appropriate ministry that understands the risk and the deployment and has years of experience in dealing within that sector, not the central bank.
And definitely the central bank did confirm a lot of disbursements into that sector. Is there any other reason why we're still seeing food prices high at this point?
Again, like I said, if you want to measure the impact, right, of any intervention, look at the aim itself. So if the aim was to drop or to reduce the price of rice, go to the market and check. In the last 5 years, the price of rice hasn't dropped, right? Which basically signals that nothing has changed. And then your smuggling activities has not also changed, which also suggests that the supply gap is maintained, it's still the same. So then how then can you tell me that the scheme is successful? Purely because you see a few people wearing T-shirts on TV saying they are farming. That is not farming. Do you understand? So for me, if you want to measure this program, tell me that between this period and this period, rice came down by X%, but due to inflation and inflation of the inflationary on import cost, it went up to this much, it went up by this much. We will still be able to measure the impact. But where we are now, there's really nothing. There's nothing. It's 1.4 trillion or there, but we don't even know what the true figure is anymore. Gone. It's thinner, it's gone.
And it seems the Anchors Boros program only focused on rice farmers. We didn't get much action with oil palm, rubber, cashew, and others. They were quite ignored. Why do you think that happened?
Well, I had this conversation a couple of days ago, and I think it just boils down to, first, I think rice is an economic crop. I also believe that a lot of PR was built around the association, for the Rice Association, and in that manner they were able to push a lot of funds in that direction. Perhaps the Oil Palm Association is not as vocal or as strong. So I think that was primarily the reason why this happened. In hindsight, I think I don't want to get in trouble, but I believe that is the reason why you saw a lot of the funds diverted to rice. It's just an economic crop. If election comes, everybody's bagging rice to give out to people to vote. If Christmas comes, everybody's buying rice. If Salah comes, everybody's buying rice. It's an economic crop. So it kind of made sense, but not at the expense of other crops.
And you did mention the, farmer associations. What role did these associations play, in most of these, the disbursement, processes of most of these interventions?
Well, I think those associations, perhaps the head of the Rice Association will need to come and answer those questions, because there are quite a few questionable acts on their path. I'm not a member of the Rice Association, the Rice Farmers Association. I never quite understood the point in having those associations. If you're going to grow rice, you understand, grow rice. The market forces will determine the price. You don't need an association for that in terms of organizing the sector, in terms of dissemination of information to farmers. That was done poorly. I saw the Rice Association opening or signing an agreement in Benin Republic for land to produce rice. Why would you take Nigerian central bank money to go and produce rice in Benin Republic? Why is your director speaking French? Why is he from Niger? So there are a lot of questions that they need to answer, So again, there's that issue of that lack of monetary aspect when it comes to disbursement and who you're disbursing money to, which is the issue of merit I mentioned earlier.
So I guess, in Nigeria, we have associations for, almost everything, in Nigeria. But, now we're here, with all the interventions in the agri sector. What do you think, should happen, going forward? What do you think should be the plan of action for President Tinubu in this, for this agricultural sector?
Okay, so I think that we should have certain focus crops. I think, so if you can't just focus on just rice, we need to diversify a bit. So we're going to have to look at cassava. Cassava is a huge crop across Africa, West Africa, and also East Africa. And also China. China is buying a lot of cassava. You have to look at ginger. You have to look at the share industry. So there are a lot of products that were actually pinpoint and say, okay, these are the export products. These are the products we want to grow for Nigerians to consume. Earmark them in that manner, and then fund them, but in a way that you can measure the funding. And also, please, move back agriculture to the Ministry of Agri. Let finance fund any intervention and give the Bank of Agri money, because they're the only bank that understands the risk. Do you understand? That has the appetite for the risk. I understand that it takes time to make money in agriculture. Commercial banks don't understand that. So that's what I believe needs to be done. And also, NERSA should go back to the original mandate. NERSA was created to give guarantees on loans, not to give out loans. I mean, how much was sunk? There's a 400 billion naira issue in NERSA that seems to have gone quiet. They need to revisit that issue because these people came overnight and ruined the sector, which I worked very hard, to help in structuring. So for me, it's a bit personal as well. So I think in that light, if the government can move agriculture back to the Ministry of Agriculture, brush up NERSA, the original mandate of guaranteeing, so that if a commercial bank is giving a loan, they can get the guarantee from NERSA, right? Then we're on the right track. And then the Nigerian Agricultural Development Fund coming in to plug the gaps strategically. I think then we're onto something good.
All right, we'll definitely keep watching that fund going forward for sure. Thank you so much. We'll have to leave it there now. Mr. Rotimi Williams, founder, Kereksuk Rice Farms. It's great having your perspective today. Thank you.
Thank you very much, Ladi. Thank you.
All right, so after the break, AFEX Commodities Market Update is next. Do stay with us. There's Business Morning. Let's take a look at what happened on the AFEX Commodities Exchange for the week ended. Now, in the last trading week, there was mixed performance across key indicators. Turnover, that rose by 11.57%, closing the week at 10.53 billion naira from 0.91 billion naira in the last week. Volume of contracts traded rose by 11.40%. Number of deals traded this week fell by 34.13%, closing at 110 points. The AFEX Commodity Index, that rose by 0.14%, closing the week at 484.69 index points. For last week, the AFEX Export Index performed negatively, falling to 228.72 points from 229.45 in the last trading week. The volume of contracts traded was an increased volume across maize, sorghum, and cocoa. Prices across export commodities saw sesame and wheat maintained at 1,247 naira and 380 naira, respectively. Other commodities witnessed mixed performances, with sorghum rising by 9.49% and closing at 300 naira. Ginger rose by 6.78% to close at 986 naira 63 kobo. Soybean was also rising by 0.30%, closing at 325 naira 65 kobo. Cashew nut rose as well by 0.07%, marginal increase there. Closed at 611 naira 52 kobo. Cocoa, that fell by 7.44%, closing at 1,889 naira 35 kobo. Paddy rice, that fell as well by 0.34% to close at 338 naira 33 kobo. Across the grain commodities, maize, it fell by 0.59% and closed at 225 naira 10 kobo per kilogram. And now to our next conversation. In recent years, many have believed that commodity exchanges have emerged as powerful mechanisms for bolstering agriculture on the continent. It's important to consider the role exchanges actually play. Let's get more now from Ismail Yahya, commodities trading and asset manager, Marble Capital, joining us via Zoom. Great to have you on the show. Good morning.
Hi, nice to have you.
So help us understand now and explain the role and significance of commodity exchanges in improving, food systems in Africa. One would just think it's just for, basic trading, just make profit, move on. What does it do for food, really?
When you look at establishment of commodity exchanges across Africa, right, like we have on AFEX, it allows for efficiency of trading, right? It allows for you to be able to discover prices, right? Because you have access to information that's otherwise not available without the exchanges. You have a situation whereby now you have public access to this information. everybody, if you go on AFEX website, you can check you just give the prices of different grains and their performance last week. This allows investors to be able to track performance. It allows farmers and processors to also be able to understand it, basically eliminating that middle man idea and allowing people to see information as it is, gauge what prices you want to buy, what prices you want to sell. It's bringing buyers and sellers together in a central platform. So it goes just beyond the daily trading to being able to centralize the market, so to say, or create access to information, seamless information, and easy price discovery.
Yeah, we do see volatility in most of those markets, talking about price action. But how can commodity exchanges facilitate the price discovery and transparency in agricultural markets? And why is this important, for farmers and consumers in Africa?
So I think one of the benefits of the commodity exchanges is that it creates a form of standardized contracts, right, that allows transparency in between the buyer and sellers, and they're able to easily discover what price I want to sell at. It creates an open bidding process. You put up the prices at which you feel comfortable to want to sell, put up the prices at which you feel comfortable to want to buy. If there's a matching order, it matches. It also creates, consumers are more informed in terms of decision making, right? Now it's not information limited to a few, it's information available to everyone. So there's that free access, so to say, creating easy access to information and allowing for easy price discovery and transparency in trades. So ultimately, the farmers get to be more educated, the consumers get to make more informed decisions, and the market is good for it at the end of the day.
Yeah, so many decisions to make in most of these markets. But what are the potential, benefits of integrating small-scale farmers into commodity exchange systems, and what challenges need to be addressed to make this integration actually successful?
So for the benefits of small-scale farmers is it creates an access to the market that was not otherwise available to them, right? We're talking about commodities exchanges now that probably a small-scale farmer that doesn't know where to dispose of his commodities can now realize that, well, if I can meet the standards and qualities and quantities of a particular exchange, it's possible to just give this to the warehouses, right? And then also for small-scale farmers, it allows them access to finance in the sense that if they're able to trade on these exchanges, they could use their warehouse receipts as a form of collateral for accessing loans, right? Some of the challenges, and I think the major challenge small-scale farmers will face is the technology, how advanced. There's a technology gap. Currently, a lot of exchanges rely on technology to function. These small-scale farmers will also need that access to technology, right? Small-scale farmers also have limited financial resources. But I believe that with their exposure to the space, they should be able to increase their financial access. They might have challenges in terms of infrastructure, logistics, but all this can be addressed as the space grows bigger for people to be able to get access to funding to improve the value chain across agricultural produce.
I know internet access, that's another big, challenge too for most of these farmers. But looking ahead, what are the prospects and, future opportunities for commodity exchanges to continue supporting, sustainable food systems and agricultural development, in Africa?
I mentioned that what the exchange does is it creates a more inclusive market, right? So that potential exists that ultimately you're trying to create a more inclusive market where there's a link between farmers, processors, traders, and consumers, right? Everybody has access to the market. There's also that opportunity to create jobs, to diversify your income from an investor point of view. But ultimately, that there should be that link between technology and agriculture, right? So you start thinking about things about climate-smart agriculture. How do you create a more climate-friendly form of planting, soil health, water conservations and things within that thinking. So the potentials are there, but we need to address the challenges of ensuring that funding and infrastructural development are in place. And then there's also the technology to provide the farmers to be able to link up with exchanges and be able to sell their produce on such exchanges.
Yeah, definitely need a market to sell all of those produce. Well, thank you so much, Ismail. Yeah, commodities trading and asset manager, Marble Capital. Thank you.
Thank you.
All right, we'll take a moment now. Business Morning returns in a moment. All right, let's head on to the markets now. We have Anete editor with the details. Quite an incredible outing yesterday. Good morning. Wow, another. Basically, should we just say maybe close to the last 5% we saw the last time, but this time it's about 4%, 3.99 to be exact. And we did talk about this, before the market opened. We did expect some kind of incredible move in the market, and it did happen.
Yeah, Ladi, and the most interesting part is that in just 15 days, because we had, this is not the first time within just 15 days. Before now, we had about a 5.22% increase on the all-share index, which is 15 days into since this new administration started, and we get about 1.5 trillion naira. So now, following a day after, coming from the weekend ouster or suspension, if you may call it, of the central bank governor, Godwin Emefiele, the market seemed to be, cheering this report. And of course, we're going to see, we're expecting to see more.
These markets are quite, incredible. You think that would be somewhat bad news, but it looks like the market saw it as some kind of good news.
Yeah, it's a kind of a surprising twist, because in other climes, in other markets that we normally monitor, if a central bank governor is removed, it normally has a negative impact, because you see both the currencies, the fixed income market, the equities market, you would always have that effect, printing on the market. Take, for instance, if the Federal Reserve's governor, the head of the Federal Reserve's, the Fed chair at the U.S. Central Bank, if it's removed, it's going to have a ripple effect on the market, rattle the market, rattle the currencies. But in this instance, it's rather the opposite side. First, on Monday, you saw the Eurobonds surging by about 4.1% across three instruments, particularly the 2051 debt instruments of that dollar-denominated bond. And then this time, the first time for this week that the market is resuming with a very strong surge, which is lifted the market to a 15-year high. That we last saw that sometime in
58,000.
2008.
Massive
Can you beat that? So I'll be giving you more details, and of course, our analysts will be telling us, giving us more details about that. Now, so this is what you see on your screen: 1.21 trillion naira added to the total value of stocks listed on the Nigerian Stock Exchange, and it has been able to climb above the 30 trillion naira level to about 31.67 trillion naira at the close of Tuesday's trading session, which is actually the first trading day coming from the Democracy Day holiday. And then, of course, you see about 4.9%, which in basis point, it translates to about 2,232 basis point increase on the all-share index. And that's the 15-year high, which we mentioned a couple of seconds ago, that the market has rallied on the back of 61 gainers, in contrast to 13 losers. We had what you call the swoot, the stocks worth over 1 trillion naira, adding more than 1.22 trillion naira to the market. And we saw the likes of Access Bank, the likes of GTCO, what you call the fugas, particularly all the banks, they were in the green. Now take a look, the big board there. The banking sector was the most significant gainer there, more than 8.7% increase, which you see on your board there. And at the same time, the insurance subsector, needless to say, all the markets were cheering this news, and as well as an imminent reset of imminent policy reset by the new government, which has been announced, and then of course planned financial sector reform. We've been seeing that it had an effect just last week, and at the same time that effect is still continuing following the suspension, the announcement of the suspension of the central bank governor Godwin Emefiele. So we'll be talking to our analysts to give us more details about that. But before that, let's take a look at the the activity chart. We saw quite an impressive performance on the activity chart, more than 100% increase in the total volume of shares traded. We also saw the value up by more than 215%, while the deals also in the green sector. For the top trades, we see the shares of Access Bank, or UBA rather, attracting the most number of shares. We had more than 1 billion volume of shares carried out there. And then for GTCO, it was second, and Zenith Bank. So all the banks were some of the major contributors to the market's gain on Tuesday, but the likes of MTN Nigeria, which went up by 3.6%, Airtel was up by 7.78%, and then you also saw Dangote Cement up by 3.6%, so printing that. So now to get more details, let's talk to Abdulrasheed Momo, the Executive Director and Equity Trader at TRW Stockbrokers, to give us more details. Thank you for joining us, Abdulrasheed.
Hello, good afternoon. Or good morning.
Good morning. It's Lagos.
Can you hear me?
Yeah, I can hear you. I can hear you. Now, now, Abdulrasheed, I'm sure this comes to you more as a surprise.
What's wrong with the network?
Yeah.
Okay, can you hear me?
Okay, yeah, I can hear you. Now, I normally call you the 50K man because, of course, you made that prediction that the market would hit 50,000 points some time ago. Now, but this time, the market is trading towards the 60,000 points, which we saw on the board there. Now, can you give us more details about what's this market? Why is this market coming up besides maybe the suspension of the central bank governor? Can you give us more details into this, and how's the market trading at the moment? Hello, Abdulrasheed.
Okay, let me go first. Let me start with this. Can you hear me?
Yeah, I can hear you.
Okay, let me go straight to first the suspension of the CBN governor. As you said before, anytime there's things like this happen anywhere in the world, you see the market normally goes down. I remembered when Sanusi, former CBN governor Sanusi, had same issues. The market moved from about 41,000 points to about 37,000 points from February to about March, before we now saw that recovery phase. Well, if you look at now, there's a new government. The first day President Bola Ahmed Tinubu, on his speech, he laid down some criteria in terms of the oil, the fuel subsidy had to go. He talked about cleaning the CBN, you understand? So all these factors, and most of these things he was saying that in terms of we have an interest rate, you understand, across the board, so that we'll not be having different interest rates. We talked about the commodity board, where they are going to introduce all those things. So at the end of the day, most of these things, if you look at all what he said, they affect the market. Any sector you can speak about in terms of banking, think of insurance, think of oil and gas. So all these statements are actually giving the market the current boost that we're seeing now. So it's so for the announcement that came on Friday that they suspended the CBN governor, we saw what happened. Mind you, the first time he made that statement, when he was sworn in, the next day the market gained about 5% plus. Now the highest you've ever witnessed in the stock market. And now the suspension of the CBN governor, the market moved again for the second time. I mean, we've not seen such huge rallies for a long time, I won't like to. And it's good for the market. Why I said so that if you compare, like I wrote in a report, I actually called it the Emefiele bullish trend, because market there's always a tag on every rally. You know, as I said, the Sanusi rally when market went down. This is the Emefiele rally where prices have moved in terms of, if you compare current price now it's within, the market is back to about 2008. This was the last time we saw such huge numbers, about 58,000 points. And our market is within that level. If we're not careful, the way the market is going, we might be hitting all-time high for the market historically has been about 66,371. And the way this market is going, I know for every bull rally, there must be a form of correction. We are likely to see more correction, but the market is more on the bull side. Why I'm saying that if you compare most of the stocks then in 2008, especially the banking sector, they are not even close to what they are now. Stocks like Zenith was about 50 naira plus. If I go to all-time high about 75 or 76 naira. That was Zenith. So if you look at the current price of Zenith, Zenith is doing about 38 naira, 39 naira. Access Bank was trading about 26 naira then in 2008. The current price is about 13 plus. So basically, we still have room to the upside. There's still going to be more. As we speak now, the market, all the indexes are in green. I'm not seeing any sign of red anywhere. So, and I think market is still going to push more. Why? Because then, if you remember then, the market was on borrowed funds, margin loans. Margin loans was what pushed the market then. Everybody was collecting loans from the banks and the market will move. But if you see, as the market speaks now, these are real money. There's no margin loan anywhere. So these are real monies playing in the market.
Okay.
So I think it's a genuine bull trend that we need to see more of this.
All right. Thank you so much, Abdul Rashid. As a matter of fact, that has been very analytical. We thank you for your time on our program. And of course, our eyes are always on the market.
No problem.
So that was Abdul Rashid Momo, Executive Director at TRW Stockbrokers. Now let's move over to another segment of the market, the fixed income market. We start with the Treasury bills market. For Tuesday's trading session, it was, which is the first on that market, we saw muted activities there. Average yield there was unchanged at 6.3%. But for the FMDQ securities market, this is what we saw, the 11th of April, which is number one there, but not the highest. It had 4 deals. The highest there is the 14th of March 2024 paper for next year at 18 deals, 7.05% for the discount. But the total value there is 53.24 billion naira. Let's move over to the bonds market. We saw bullish sentiments there, and that's because the average yield there, it paired by 1 basis point to about 13.7%. And we also saw some kind of mixed picture at both the short end and the mid segments of the market. The investors demanded the April 2032 paper, which fell by 3 basis points, and then the March 2050 bonds paper. But on your board there, what you see, the 18th of April 2037 had a number of deals, highest number of deals there, and there was a major contributor to total number of 27 deals there. And then, of course, for the OMO market, we also saw a bit of mixed activity there. So, Ladi,
so the fixed income market wasn't left out.
The fixed income market, but the unlisted securities market, it was down. It fell by about 0.03%.
Exactly. So now I guess the big question now is, will this rally continue? Abdul Rashid said there is that this bullish trend looks genuine. That's what he's saying. But now, is it that this market is going to be looking for good news within bad news?
Yeah, well, I think although I'd always put a caveat there that the market always has a mind of its own, but at the same time, I would expect that the market will continue the bull run. On Friday, it went down by about 0.05%. But of course, we saw this market rebound or rally was unexpected.
Unexpected. So, all right. Thank you so much. I need to be watching out for, fingers crossed, for the close today. Later on today at the close of the market. All right. Let's head on to London now. Let's check out what's happening in London now. London studios. We have Juliana standing by right there. Great to have you, Juliana. Good morning. Well, we're enjoying a big rally right here in Nigeria. We got data from the UK showing that the UK economy grew in April. Looks like the economy shrugged off all the strikes.
Yeah, you're absolutely right. Good morning, Laddie. We have had data from the Office for National Statistics showing that it does appear as if the UK economy bounced back in the month of April, considering it grew by 0.3% of the month. This follows a 0.2% contraction in March, and overall in the first quarter of the year, the UK economy grew 0.1%. This is mostly in part to the services sector, which has been expanding rapidly. Lots of beleaguered Brits who are not happy with their pay packet at the end of the month seem to be drowning their sorrows in pubs and bars, because they've performed very, very well, which is a good thing, because we know that all of the forecasts, particularly at the beginning of the year, were suggesting that we would be going into a recession. We heard that from the International Monetary Fund. We even heard that from the British government's own Office for Budget Responsibility. But there doesn't appear to be a recession in sight. However, there are still headwinds. We know that if we look at the G7 or even the G20, comparatively, even though inflation is a main sticking point to all of these other nations, it does remain stubbornly high in the UK. And we did have labour market data yesterday reflecting that wage growth, particularly in the private sector, is growing, and that is going to tread very delicately on inflation. So we are expecting next week, Thursday, the Monetary Policy Committee to still hike those interest rates from 4.5% to about 5%. And we know that is a huge headache for mortgage borrowers or anybody that has a significant car loan. But so far, so good. The Chancellor, Jeremy Hunt, has been responding to the ONS data, and he said it does point to the fact that all of the measures that the Treasury and the Prime Minister are putting in place does appear to be working, even though there are strikes for the rest of the week, which is weighing down on GDP growth. But yes, 0.3%, we can't complain. Any positive in the UK at the moment we'll take.
Exactly. Can't complain at this point. But let's look at Amazon now. Quite having a negative at this point. They're under fire for ramping up sellers' fees and advertising costs. Tell us more about this.
Yeah, it's quite an interesting story, actually, and I think the research has been done by an Amsterdam-based consultancy firm, basically looking at Amazon's dominance in the online marketplace in Europe, not just in Europe, of course. We know that Amazon is pretty much having a monopoly on online selling across the world. But the issue is lots of small businesses are saying that Amazon is not a friend of small businesses because over the past, I believe, 3 years, the amount it costs for sellers to use the Amazon platform has increased triple-fold, whereas sales have only increased double-fold. In fact, I believe last year, income that Amazon received from sellers in Europe jumped 6% to 23.5 billion euros. Now, that is a lot of money, particularly as Amazon is already under investigation, not just from the European Commission, but also from the UK's Competition and Markets Authority, about basically how it uses its platform. Lots of people, you put in the search in Amazon what you want, 9 times out of 10, the top products that are going to come up are Amazon's own products, which means sellers who are putting on, their own products, paying all the fees for packaging and posting and all that jazz, are not getting their just desserts. So it's an increasing issue. Amazon have had issues not just with union workers who are trying to strike in particular parts of the United States, but also with sellers in Europe who feel that they're not getting their just desserts for what they're paying the online platform.
All right, I guess we'll keep tracking that story. Thank you so much, Juliana. See you at 1:30.
See you then. Thank you.
All right, let's take a look at what's happening in all the markets now. Yeah, talking about Bitcoin, huge pressure on the crypto market at this point. We see the sentiment right there, 46. It's now fear. That's what investors are feeling right now in the crypto market, and it is quite understandable with all the pressure they've been getting from the U.S. Securities and Exchange Commission, with Binance there and crosshairs with that commission right now. We're seeing investors react. We've been in neutral for the longest time from, we did get to greed, this year, but now we're back in fear. Hope we don't see extreme fear next. Who knows what happens next in this market? Let's look at the top cryptocurrencies we track. We see Bitcoin, $25,847, down 0.89%. It did start a bullish move back up there yesterday, did hit 26,000 on that news about US CPI, US CPI data cooling there. So it did react to that, but now it's back down again to 25K level. Ethereum down 0.64%. We see BNB there did get that big jump yesterday, 6.28%, with Binance there responding to the U.S. Securities and Exchange Commission, saying that they have done no harm in the market at this point. And we've seen investors react to that. XRP down 3.76%, and we see Cardano not left out there, 27 cents, lost that 30-cent level, 1.83%. So we're seeing a lot of pressure in this market right now. Let's bring in Element Damble now, right there from the UK. Element, great to have you. Good morning. Hello, Element. All right. Yeah, you might have to unmute there. I think we'll have a little muting issue there with Element, but we'll try and get Element. But if you can hear me, Element, you can respond now. Okay. Okay, we'll try and get Element, at this point, but we're looking for, the major support level. Let's try and get Element now. Hello, Element, can you hear me? Okay, so we're having audio issues with Element there, but let's look at the top gainers now. We'll try and get Element back again. Let's look at the top gainers this morning, even though we know it's a tough market. Right now we see INJ up 6.83%, $6.22, managing to eke up a gain, this morning, even though the market is really pressured. And we see BNB getting on the top gainers counter, still on that US SEC issue, pumping up that coin. Was looking like they were going to lose that $200 level with all the pressure on the exchange at this point. And we see PancakeSwap also appearing there, 3.93%, decentralized exchange for swaps there in the crypto market. This one's not been on the top gainers list for a while, but it's been on a downtrend and is also in that Binance system there. So we're seeing that also recover. Phantom, 26 cents, 3.70%. It did get to about 50 cents in that bullish run we saw with Phantom, the DAG protocol, but down to 26 cents with all the pressure that we're seeing in the crypto market at this point. Phantom not left out, but eking up again, 3.70%. Dash, one of the oldies in the market, 30 cents, $30.25, 3.65% gain. So they're managing single-digit gains this morning. Let's look at the top gainers counter now. Let's see Woo Network, 4.87%, down 0.16 cents that we're seeing for Woo Network. Let's try again with Element Damble. Element, can you hear me now?
Oh, hey, Lottie, I can hear you. Can you hear me?
Fantastic. I can hear you now. Great. It's a miracle. Thank you.
Yeah.
All right, so let's look at this market now. We're seeing Bitcoin has been hammered, lately, but the altcoins have suffered more. Tell us major support levels to look out for Bitcoin and major resistance levels.
Yeah, it looks like we're currently close to one now. Of course, you see Bitcoin is trading under 26K. It does look like it's potentially heading towards 26,500. And as I heard you mention earlier on, of course, we know later on today we're going to have the Fed rate decision. The Fed, of course, expected to pause their current policy of hiking. So that could have an impact on BTC. Moving away from BTC, Ethereum as well. It's just trading around 1,745, which is close to a resistance or a support level of its own. And that looks like it could potentially be making a run towards 1,800. But across the board, as you rightly said, the situation with the SEC has greatly dented investor confidence. So we have seen a lot of bearish activity in the last week or so.
Definitely, this market is, we do see a lot of bearish movement sometimes. It does come, when you see a bullish market. But do you think that this time it's going to be different? Looking at a long-term, play at this point for this market, who do you think is going to come out on top?
Yeah, I don't know. I'm not sure if you saw the series Billions. It seems like Axe and Chuck Rhodes. It does seem like the SEC kind of is taking that approach as far as its battle with the crypto market. But if you're looking at it from a purely technical perspective and kind of muting the fundamentals, prices are incredibly oversold now. So even yesterday with BNB, we saw BNB trading at a 6-month low, then of course rebounding. So traders And long-term traders are looking at buying the current dip. Because if you're looking at it in the grand scheme of things, the question is how much lower can it go from a volume perspective? Of course, price can decrease, but in terms of market volume, it is relatively oversold. So you are looking at longer-term bulls, looking at this as a perfect time to buy the dip.
Yeah, and obviously most participants always believe there is that possibility it all goes to zero, but who knows? Thank you so much.
Yeah, fingers crossed that's not the case.
Fingers crossed.
Yeah, who knows? Right,
exactly.
Cheers, thank you.
Thank you so much, Aliman Dambo, financial market analyst there, giving us the points to look out for, resistance and support zones to look out for the price of Bitcoin and Ethereum. So that's how the market is looking with XRP there. Showing there on the losers counter 3.49%. Also, I'm having issues with the US SEC at this point. So that's how the market is looking right now. It's still fear right now in the crypto market. Investors quite jittery at this point. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye-bye.